Hey, what's going on, everyone? Matthew from therighttrader.com back again with another stock market video. Today we're going to be looking at some support and resistance levels once again. I'm going to update you all on what I'm seeing with the charts, how I think the whole economic situation is going to pan out, and how we can expect that to impact the stock market, individual stocks as well. I'm going to be obviously focusing initially on the SPY S&P 500 ETF, like I always do. It tracks the S&P 500, and then we're going to look into some individual stocks, including stocks like Apple, Tesla, Microsoft, Amazon, ExxonMobil, and some airline stocks like AAPL as well. So first off, I wanted to point out that today we did see a relatively strong market bounce throughout the board. Couple industries here and there that stayed red, rights being one of them, but overall, we got a market bounce today. And we've actually been seeing the market bounce for a few days in a row now. That is not necessarily worrying per se, but I remain cautious in a situation like this. Despite the fact that I did buy some stocks while they were pretty low, I think that there could be more downside to come depending on the stocks. And also, just in a time like this where there's a lot of uncertainty, I'm sticking to safer asset classes for the most part, with some targeted stock market investments with good long-term companies and options. So my favorite assets in times like this, I rank them: Bitcoin, number one; bonds, number two. There's some great bond options, like let me pull some of those up for y'all, because there are indeed some really nice bond options. One of them being the Vanguard Total Market Total Bond Market Index Fund. This is a really nice one that pays dividends every month as well. We have other ones that are corporate bonds like LQD, and this is one that I like a lot. I'm going to be buying much more of this in the coming weeks. Also pays on a monthly basis. So bonds are a pretty nice option right now when times are a little bit more uncertain and bearish. That's where a lot of smart investors flock to. The government also is buying certain bonds as well. So there is a lot kind of heading towards bonds being a relatively safe asset right now, and of course gold and silver. But to get back to stocks, looking at the chart of the S&P 500, we're seeing it come right back to this white line. This white line is the middle Bollinger Band at around $262. And as you can see by what I had drawn out with my little sketch here in red, that's exactly where I predicted us to reach on this initial bounce. And we could move higher, right? We could go up to $280. We could go all the way up to $380. $300. That seems a little bit unlikely, though, in my opinion. And I think we're probably going to stay somewhere around this middle Bollinger Band line, so around $260 for now. But I would be careful, because we're going to see on a couple charts some things that could be concerning. And while right now it looks like we may start to see some pretty safe stabilization, that's not to say that we couldn't be heading down to $200 and even potentially lower if things get really bad down the line. So for now, everything looks pretty good on the chart, right? If I go ahead and draw our downtrend line, we saw that we're actually breaking a little bit above that. So that is a good bullish sign, and I'm not saying that that's not the case. We're actually even beginning to uptrend on the RSI. But you have to look at the deeper picture here, which is that, this is pretty much our second, maybe first real bounce since the drop happened. And, in times like this, we could have many bounces that flake out until we get the true real bottom and bounce in. And that's what I think is the key thing to remember in a situation like this. We also turned bullish on the MACD, and you're going to see these general patterns on a lot of stock charts as well. And I'll just point out the previous support levels that I had mapped out here, as far as, if we were to fall lower, kind of where we can expect some bounces. So of course, $232, $214, $200, and one that I should definitely be adding based on where we're at now, and the fact that Bollinger Bands could stabilize in this range over here towards the middle between $232 and $300. If that's what we're going to see, which is a pretty likely option in the shorter term, we could see the S&P 500 ETF SPY at around $250. Also a huge support level based on where we're at right now as well. So that is, kind of dead smack in the middle of where we are right now and what we could see based on likely stabilization in the coming few weeks. Now, let's take a look at some individual stocks to give us maybe a better perception of what's happening with the market. Microsoft, pretty strong mover today, one of the strongest movers in the tech space. It did break out of this shorter downtrend line. If we were to draw it like this, if we were to draw it a little bit more strictly, taking this peak over here, we do still have a downtrend line present, and that's what kind of worries me. Is it's easy to maybe perceive one specific bounce as being, the bounce to set us free, so to say. But if you pay more close attention to maybe some other downtrend lines, you're going to see that we are, by all means, still in a bear market setup, despite indicators like the MACD turning green. In situations like that, you need to look at more than just one thing, because although we do have some bullish signs, there are other signs that are pointing more towards consolidation and potentially even, bigger moves lower. So for right now, for Microsoft, I think it bounced too much, in my opinion. I don't think we're going to see it stay above this blue line at right around $160. That's the 100-day moving average. I think that we're going to fall back below it and then just stabilize around $150. So that's something I'm paying attention to. A lot of stocks that are already pretty high, and if we look at the Microsoft chart on Yahoo Finance, not that Microsoft is a bad company or anything like that. That's absolutely not the case. If we look at it, it's still extremely high compared to what's happening with the overall economic condition. I wouldn't be buying a stock like this that's this high, right? It's still fully, so to say, near all-time highs, and this could fall, all the way back down to $100 pretty easily. So I would be somewhat careful with these stocks that have almost not taken a hit at all in the grand scheme of things, right? So if we go back to the chart here, we'll zoom out a bit. We'll take a longer term view. We're still very high, and let me just copy this right here to show that these patterns tend to repeat themselves. We could pretty easily, I'll just drag this one up. We could pretty easily be seeing the exact same thing. If we look, we had a all-time high like that. We peaked out and then we fell back down and went into a dragged out consolidation for years. This could be an exact repeat right now. We're still very high, is what I'm saying. And that's why, moving back down to, I said $100 before, which is definitely possible. I think that would be, on the lower side of things. But, very easily around $115 to $130 could be a likely stabilization area based on what I'm seeing here on the Microsoft chart. Let's compare it to Apple. We're seeing, some differences, also some similarities. I'm going to zoom in a bit on the Apple chart here, point out the longer term view. MACD, we are very high, and in times like this, I'm not liking these companies that are near $1 trillion of market cap in times like this. To be honest, I personally am staying away from them, and I'm not here to give financial advice. I never do. I just share my personal opinion, so please keep that in mind. But what we're seeing on the Apple chart is a little bit more difficulty stabilizing and really finding some strength. So we are, pretty much still very much in our downtrend here as far as the Apple chart is confirmed, and that will likely mean that we will fall lower in the symmetrical triangle pattern, really testing that support at around $233. Could very well fall below that. I think it's actually likely that Apple falls below $200 here in the coming months. Let's take a look at a stock like ExxonMobil to switch things up for just a second. ExxonMobil, what I'm seeing here is obviously an extremely strong correction and pullback, right? Obviously, got a downtrend now. That's not even a question. But I think that we're seeing a couple signs that it fell kind of as much as it could right now, which is a positive thing. I don't really see us flipping below $30 here. I think we're probably going to stay between $30 and $40 for weeks to months, in my opinion, on ExxonMobil. We're seeing, a pretty sluggish, flat movement on the RSI, and we're seeing the lower Bollinger Band hook back higher, which leads me to think that we're going to start to see the Bollinger Bands flatten out and then get that stabilization around $35. Also, I said that I was going to cover Amazon, so I don't want to forget that one. Amazon right now, it's kind of benefiting from the situation in certain ways. In certain ways, there are also some concerns, but I'd say could peak above $2,000 in a certain situation. I'm kind of just expecting it to continue along the lines of, kind of bouncing up and down in this wedge that we're in. If I go ahead and zoom out, you'll get a better idea of what I'm talking about. Sorry for drawing lines everywhere. I know it's a bit messy, but we have this wedge that we're in right here where most likely we're going to be moving up and down in this pattern for quite some time into 2021, but it should be a stock that's probably not really going to come crashing down at least. So that is something that should be mentioned. Probably a very slow and steady move higher is what I think is going to happen with Amazon. Now, let's take a look at some airline stocks, see what's going on there. For American Airlines, I think we're seeing something relatively similar to ExxonMobil, where for now it looks like we may have sort of found the bottom. This might vary for individual stocks, but based on what I'm seeing, could be somewhat of a bottom here. However, you need to be careful with that because we are still downtrending, and the downtrend line like this will put a lot of pressure on the price. So we absolutely could fall below $10 here on American Airlines. And, we could bounce and then stabilize around that area as well. So a lot of options are possible, but need to be careful with these downtrend lines because they can absolutely cause us to fall lower and create some pretty strong damage to the price as well. Finally, wanted to take a look at Royal Caribbean. This is a cruise ship stock, so sort of similar situation, strongly affected like the airline stocks. And as well, we're seeing what could be signs of, sort of a bottom put in based on this MACD coming back up and then potentially stabilizing around $20 to $25. Absolutely a possibility right now, but like I mentioned with American Airlines, it is also a real risk that we could face a lot of pressure from the downtrend lines, and those could potentially push us below that $20 mark and then fall lower into those $15, $10 levels. Obviously that would be very low and concerning, but right now we're still safe. However, it's really a matter of testing and a matter of time of can we break out of these downtrend lines before they force the price down in a way. So with that being said, this covers the stock market update that I wanted to do. Thank you so much for watching. Make sure to follow me on Twitter for live market updates and check out my technical analysis master course, The Ultimate Guide to Technical Analysis. It's less than $20. You can try it risk-free with our 30-day money-back guarantee, and it's got great reviews, over 42 students now enrolled. Thanks for watching, everyone, and have a great day.